is Ken Kraetzer for CBSI Services Talking Business, our interview series talking with leaders in the field of digital marketing, banking, insurance, customer service, and business education, and all to highlight the great work by our team at CBSI. We're based in Harrison, New York, and we provide insurance-based benefits to the credit card industry. Now, we are so glad to have back on our interview show today Jim Perry. Jim is with Michigan-based Market Insights and consultant covering both the consumer banking, retail banking, branch banking. Jim, good to see you. Happy New Year.
Happy New Year to you, Ken. Great to be with you again.
Yes, absolutely. Now, it seems in a lot of ways, the fourth quarter was fairly strong in holiday sales, both retail and online. Travel picked up, and then COVID happened right around Christmas week, which really created a challenge in a lot of ways. How did you see fourth quarter go for banks, credit cards, retail?
I mean, for the most part, again, the quarter felt very strong. Although one of the things I think everybody went into the fourth quarter with such strong expectations. You know, it's been such a hard 18 months, 20 months, almost 2 full years now. And I think a lot of people are really experiencing that disruption fatigue. It's beyond just pandemic fatigue. This is especially in the credit card industry and the banking industry. You know, there's been year after year after year of disruptions that are always changing the outlook. So I think there were a lot of expectations going into the fourth quarter, some of which were met, some of which weren't. There's still some data I'm interested to see on really what the impact of buy now, pay later and all the new variations on that particular service, how that ended up impacting people's use of point of sale credit.
Well, buy now, pay later plans certainly were one of the big stories of 2021. You see them now on so many different ads for higher priced consumer items and some not so higher priced. How do you see the performance of that going? I mean, the banking side might be concerned about what the losses might be on that type of lending.
You know, I may have mentioned to you some of the reports that I've seen right now are really all over the board. You've got some suggesting that, you know, as high as 30% of those that are using it have difficulty at one point or another making at least one of the payments. So again, until kind of across the industry, we actually take a look at what that is. I mean, it's hard to really judge. In most of those cases, I'm assuming that they're not having any difficulty really with the collection of that over time, because one of the factors that seems to be influencing it is how do people actually set that up in terms of payment. If they set it up with their debit card and it happens automatically, then of course it creates issues for the bank or the credit union. But if they don't set reminders up, if they don't, you know, they simply just forget to make the payment. So things are late as opposed to defaulted. So I don't know that there have been rather high default rates at this point, not that I've seen, but again, until we actually look at the numbers from the last quarter, I'm not sure what we're looking at.
Sure. Certainly, buy now, pay later has become very popular and another option for consumers. Now, we just saw the financial results for the major banks came out last week. Very solid returns reported for JP Morgan Chase, Citi, Wells Fargo, among the leaders. Certainly, that's good, you know, for a period of pandemic. Certainly, the government stimulus and the Paycheck Protection Program loans must have helped. How did you see that? Did you see the industry across the board besides the, you know, the top national banks do?
One of the things that I'm seeing, of course, is that earnings are down. Earnings aren't as high as they were expected, and it's not because revenue was down. For the most part, revenue was pretty equal, but expenses are up. And one of the biggest expenses that everyone's having to deal with right now is wage inflation. Within the industry, not only are you having difficulty getting talent to come in, but there are kind of short-term staffing issues that have been exacerbated by the pandemic that are also creating all kinds of additional expenses on the work front place. So plus, when you have major national institutions like Bank of America upping their base salary to $25 an hour with a target of reaching $30 an hour, and you start seeing a lot of folks for entry-level positions, really improving that that income. Sure, it's going to have long-term impact on the bank's earnings and what that's going to look like. So there's, I think everybody's still very optimistic, but they're also understanding that some of these expense side issues, they're not going away. They're going to be dealing with, the workplace inflation kind of issue, but they're also going to be looking at technology expenditures. That is the one thing that continues to drive conversations about consolidation in the industry right now, because you've got so many institutions that can't achieve some level of scale unless they look for merger opportunities or acquisition opportunities. The only way they can start dealing with some of the expenses of technology costs is merge and acquire, or what do? You end up looking at, do we get rid of some of our bricks and mortar? Do we start kind of getting rid of some of those expenses and redeploy our capital? A lot of things to consider, and it's very market specific.
Now, one of the areas, and you mentioned about taking care of a workforce in a banking environment, is in customer service. Certainly a very challenged area this past year with the pandemic, and then with work shortages. Some banks worked with work at home as a necessity, had to make some adjustments to keep data secure in a work and home environment. How did you see customer service handling the pandemic challenges like work at home and data protection?
It was really pretty fascinating to me that the overall response from the industry was happening on such a broad spectrum, because you had many institutions that some of the kind of technology that they were able to bring to bear at the early part of the pandemic, that had already been kind of in motion. It was already planned. So they just had to press down on the accelerator a little bit faster and get that deployed. But then on the other end of the spectrum, you had folks that didn't have that technology kind of ready to roll. So the best they could do was, the customer service was happening very analog, where when branches were closed, they were sending their people masked out to the street corner to meet their customers, at their car when their drive-ups couldn't handle all the traffic. So with that kind of broad industry-wide support, there's still those kind of overall challenges. One of the things I see also, though, that everything always comes down to what happens locally, because customers of those banks that were having their tellers coming out, of the bank to the edge of their car at the corner of the street, they were as happy with that customer service as those customers that were receiving a kind of personal banking experience via video through their mobile app or online. So it really depends. I mean, so much of the perception of the success of the industry depends on how well they manage those customer expectations.
Well, one of the elements we've all been talking about is digital transformation in banking and how customers accepted it, how different segments, did the older segment accept it as well as other younger groups. What was your observation on that?
Oh, I think for the most part, regardless of demographic, one of the things that has happened due to the pandemic, I think all consumers now are judging their relationships to their financial institutions based on three criteria: speed, security, and simplicity. Those are the measures, those are the filters that we've been telling all of our clients, look, you have to use that as the filter through which you make your strategic choices about digital transformation within your organization, because that's almost a universal expectation these days, regardless of what's happening. And what continues to influence that, of course, is all of the retail experiences that we continue to have outside of financial services. Because look, if we're locked in at home and we can't go somewhere and we're doing everything digitally, I expect my bank to be able to do the same thing. It's simple as that.
Certainly, there are certainly new standards that that customers expect. One of the things that you talked about in another podcast on your page, in fact, I'll say for marketinsights.com, was humanizing the experience.
Mm-hmm.
In that, yes, you may become digital, but you still want to have a human touch at different times. I think that's so important. Alvin Toffler talked about that in his 1970s book, Future Shock. He talked about the need for high tech, high touch. And so you talked about it recently. What are you thinking when you talk about humanizing, keeping the bank experience humanized?
Well, one of the things that this past 2 years of kind of digital acceleration has yielded is this expectation on the part of the consumer that they can do anything they want to do or need to do in the time that they want to do it. So that means continuing to provide both the digital tools that they're going to need, but in those moments when they actually want to have some kind of face-to-face interaction, even if it's in a digital channel, that it's time for a lot of banks now to really evaluate how can we bring that personal experience into a digital space. And thankfully, the technology exists out there from a lot of different players that are allowing financial institutions to embed video where you can talk to a personal banker on your mobile app, on your online device, on your laptop, computer, whatever, so that in those moments where you no longer want to talk to a chatbot, you no longer want to talk to just try to sort it out yourself from the online experience, you can actually interact with a human being. And I think that integration, kind of making our digital experience more human and our human experience more digital, is really the key to the future for all financial institutions.
Yeah. Hey, I couldn't go by without talking a little bit about one of the things we've done here at CBSI for years and years, which is cross-sell, and often cross-selling insurance products. Certainly, it's been a goal of the banking industry for 4 decades to try to find different ways to cross-sell financial service products, insurance, brokerage services, retirement planning. It goes back to my days when I was at American Express and at Dean Witter. Where do you see that now? How do you see banks successfully cross-selling products, perhaps insurance?
Where they're most successful is when they've flipped the conversation from being very bank-centric to very customer-centric. Because right now, I think you can read a lot of information out there about loyalty and the diminishment of customer loyalty over the last several years. Because one of the things that all customers are reevaluating now is that value exchange between themselves and the financial institution. It's like, okay, I will pay you this fee, but what do I get in return? How are you meeting my expectations? And so positioning this, whether it's insurance, whether it's being able to track your credit score, whatever additional value add that bank can bring, if you're making that customer's life easier, simpler, it's all about how you position it. If the bank is just looking at it through the filter of we need to increase our sales, you're going to miss the point. You really have to think the way the consumer thinks and make sure that you're so focused on meeting a very specific need that consumer has. And if you don't know your target customer well enough to know whether or not they even need insurance or need any particular other product, you're in trouble. One of my biggest frustrations throughout financial services is you're sitting on amazing information, but you're not using it to drive that kind of personalized customer experience that's really going to increase loyalty and make sure you can retain those relationships. I often use my own financial institution as an example. Look, for a dozen years, I've made a monthly payment to Toyota Financial. My bank knows that information, right? They can pretty much tell from what I pay every month and how that's changed over the years. Wow, this guy probably buys a new car every 2 or 3 years, right? I've never, ever received any kind of offer from my financial institution for financing a car, ever. What's wrong with that picture? It's like until we really mine our data and I think data analytics is one of the big skill sets that most smaller financial institutions really, there's a deficit there. And until they kind of ramp up that game a little bit, they're going to be challenged to continue to compete.
Hey, and one of your blogs I was watching, you talked about how to help the banker decide where to invest. You talked about whether they should invest in a mobile app or something else, and your answer was you got to look at the customer data about what aspects is a customer expecting to have top service on. Tell us a little bit more about that thought about using data to determine where to make an investment in your service platform.
Right. In this particular situation, somebody was concerned about, do we deploy some of our capital to place ITMs in all of our branch locations, or do we end up putting more money into mobile? And so in that specific example, I said, look, your data holds so much information for you right now that can provide an answer to that question. Because take a look at, as an example, over the last 6 months, your customers' use of your mobile app. How often are they using it? What are they using it for? What percentage of your customers are using it? And what percentage of your customers over the last year have been branch centric, have been going to your drive-thrus all the time? At that point, you can at least make a value judgment about what segment of your customers, what percentage of your customers are most at risk if you don't tend to the deficit in the experience that exists by either not having an ITM in your drive up or by having a subpar mobile experience, when quite honestly, the major competitors out there, they're changing their mobile experience so rapidly, and the iterations are coming out probably every month, every 2 months, every 3 months. It used to be that some of the largest banks, they would roll out changes to their mobile apps once a quarter, maybe once, almost like a campaign.
Sure.
Now they know that in order to stay ahead of the game, they've got to bring those new iterations up when they're ready to go. And if you're not competing at least at that level, the mobile issue certainly needs a lot of attention. But again, my point for that particular client was, let your local data drive those kind of decisions, because it's really easy when you look at data from across a national platform to say, wow, everybody's doing this. Well, you may not have to do it today. You may be able to put that off for 3 months, depending on what your customers or what your market data is telling you.
Absolutely. And Jim Perry from Market Insights, always a pleasure to talk with you. And tell us, if you would, a little bit about your company and also some of the places and topics that you're going to be speaking at banking and trade conferences coming up early this year.
Sure. Let me quickly speak to that. Because you were talking about keeping banking human, I'm actually going to be presenting on that topic at Nebraska Bankers in early February. I'm also going to be doing a webinar for Virginia bankers in March, and then I'll be doing, I believe, something for the marketing conference for Ohio bankers in March. So we're out there talking about a lot of different things. And one of the things that has always made my presentations, I think, a lot of fun for me is what I share is based on our work in the field. Market Insights has been around for almost 30 years now, and we've been working with community-based financial institutions, both community banks and credit unions, really helping them analyze their data and come up with growth strategies that make sense based on their customers and on their markets. For many, many years, we spent a lot of time primarily helping people decide where to put the next branch. That's not so much our work these days. If anything, it's which ones do we consolidate, which ones do we close, or more importantly, how can we redeploy our capital in a way that's going to help us continue to grow? So,
okay, Jim Perry, final thought for us today. Final thought on what a topic you expect is going to be very important to the banking industry coming up this year.
Well, everybody's wanting to know, what's the path forward? What's next? What do we do? And the biggest message there, I think, is, look, folks, you can't take the foot off the gas. You've got to keep the effort going because everything around you is changing. Consumers, their behavior is still changing. It's still shifting. Don't try to spend a lot of time worrying about the next normal. You've got to just keep accelerating and innovating, and that's the only way forward. You've got to kind of ramp up the pace.
Absolutely. Jim Perry from Market Insights. You're based in Michigan, and just a delight to talk with you. I hope we can catch up with you again later this year, and really best wishes to you and your team and family for 2022.
Thanks so much, Ken. It's always a pleasure to talk to you.
Our pleasure. We'll do it again. This is Ken Kraetzer for CBSI. We're based in Harrison, New York. We provide insurance-based benefits to the credit card and payments industry. Thanks to Jim Perry. We'll do We look forward to another episode very soon. Thank you all for watching and have a great day.